Welcome back, it's Jason Walter here. I have a very important video I want to share with you guys today because we're starting to see this new trend emerging that could put the brakes on this housing market slowdown. In fact, it could potentially minimize the impacts of a housing market correction this year. And these new housing market trends we're seeing right now is based on my own analysis, so you're not going to see this anywhere else. So the latest trends I want to share with you guys today is actually from Realtor.com. They actually just announced this on today at the time of this video, which is the 25th of August. And this is trends or weekly trends for the week ending August 20th of 2022 or this year. And this is a report right here. Actually, I didn't even read this report at all. Instead of sharing Realtor.com's analysis based on the latest housing market trends, I want to share my own. So if you actually go to this website right here, and the link is right there, it's realtor.com/research/data. It pulls the latest data that we have from realtor.com. If you actually go to this section right here, inventory/weekly, and click on this link right here, it shows you weekly data over the past several years for a number of different metrics, including home prices, housing inventory, new listings, etc. So if you click on that link right there, it takes you to this Excel file right here, which I have analyzed after downloading it. And I don't want to overwhelm you guys. Let me just hide this for now, because I want to talk about active listing inventory and what we have been seeing and what the new current trend is right now, according to Realtor.com. So as it is important to you guys, active listing inventory or housing supply has basically been increasing ever since the first week of May. So we basically started the year off in January down 29%. So on January 8th, we're actually down 29% for the total number of houses listed for sale compared to January 8th of 2021. But because we had a decrease of buyer demand, that caused housing supply to actually increase, right? So we started the year at down 29%, but that trend basically started to dwindle. In other words, the gap between 2022 and 2021 basically narrowed. And so much so because on May 7th, we basically had the same number of houses listed for sale compared to the same week in 2021, which obviously is a big difference compared to January, where we were down 29%. And so ever since May, we have the same number of houses listed for sale compared to the same week in 2021. And that actually has accelerated over the past couple of months here. And you can see that right here because the acceleration was actually pretty great, because on May 14th, it was up 5% compared to 1 year ago. But then fast forward all the way until July 2nd of 2022, we were actually up 29% compared to the same week in 2021, which obviously is basically a reversal compared to the first half of this year, or the first week of this year, I should say. And again, as I've been mentioning to you guys for several months now, the increase of housing supply was due to a pullback in home buying demand. In other words, less contracts are being signed to buy houses, and also houses were staying in the market a little bit longer compared to 1 year ago. But that was what the old news is. Here's the new emerging trend we're seeing right now. But ever since June 25th of this year, housing supply has basically stagnated between 25% and 30% increase compared to 1 year ago. So in other words, we haven't had much of a change of active listing inventory over the past 2 months. This is much different compared to previous months because housing supply was basically skyrocketing due to a huge pullback in home buying demand. But as you guys can see here, over the past 2 months, housing supply has basically hovered around 25 to 30%. And here's another alarming trend we're seeing right now regarding housing supply. So if you look over the past 4 weeks, housing supply has basically decelerated for 4 consecutive weeks. So for the week ending July 30th of this year, housing supply was up 30%. But ever since then, it has been decelerating. In other words, we're seeing an increase of housing supply compared to 1 year ago, but that growth has been slowing down over the past 4 weeks in a row. So the big question is, why are we seeing housing supply basically stagnating over the past 2 months? Because this is a new trend emerging because housing supply has basically been increasing greatly ever since basically the first half of this year, or the first quarter of this year. So why has inventory been stagnating? Here's the answer, or here's my reasoning why I believe that housing supply has not been increasing at the same levels over the past spring, I should say. So here's why. new listings has basically been decreasing for 7 consecutive weeks here. This is on a year-over-year basis here. So starting on July 9th, the week ending July 9th, we had a decrease of new listings compared to the same week in 2021. And ever since then, we saw a decrease compared to 1 year ago. So for 7 consecutive weeks now, we've seen less new listings compared to the same weeks in 2021. And obviously, a new listing is when a home seller lists their house for sale. So we're starting to see more sellers becoming reluctant to list their houses for sale, potentially due to this slowdown in our housing market right now. What we're also seeing right now is this right here. And as I note right here, we have been seeing weekly declines of active listings actually accelerating for the last 5 weeks, causing inventory gains to weaken. Here's what I mean by that. So for 1, 2, 3, 4, 5, 5 consecutive weeks, actually 4 out of the last 5 consecutive weeks now, we've seen an acceleration of new listings compared to 1 year ago. In other words, we're seeing fewer and fewer new listings compared to 1 year ago, and that has accelerated for 4 out of the last 5 weeks. And potentially because we're seeing this pullback in home buying demand, and because we're seeing less new listings hitting the market, these could be the main 2 reasons why we're seeing a stagnation of inventory growth over the past 2 months. You also can see this new trend regarding new listings basically coming down compared to 1 year ago, basically over the past 2 months here, when looking at Redfin's data as well. Again, this is on Realtor.com's data here, but let's look at Realtor.com, or Redfin, I should say, because basically ever since the 4 weeks ending July 10th of this year, we've had less new listings hitting the market compared to 1 year ago. So much in fact that for the latest trends we have right now, for the 4 weeks ending August 14th of this year, according to Redfin here, we're actually down 13.6% in the number of new listings compared to the same time period in 2021. Because of this decrease of new listings over the past 2 months, this is one main reason why inventory growth has not been accelerating like it once was. Here's something else I also want to bring to your attention as well. So here's days in the market. So days in the market is basically the time period when a home seller lists their home for sale to when they ultimately accept an offer from a home buyer and the house ultimately closes escrow or sells, right? That's days in the market. So days in the market has basically been higher compared to last year for 4 consecutive months now, or 4 consecutive weeks, I should say. So for the week ending August 20th of this year, houses sold 4 days slower compared to the same time period in 2021. Now, this is a lot different compared to the first half of this year though, right? Because right now houses are taking longer to sell compared to 1 year ago. Basically was the same for the week ending July 23rd. But if you actually go back all the way until the first week of January of this year, houses sold 9 days faster compared to the same time period in 2021. Here's another alarming trend we're seeing right now, because I know in previous updates from Realtor.com, they don't even mention this in their summary here, but I actually noticed this when looking at their data though. So here is the percent change of active listings with price reductions by count. So in other words, the number of listings with reduced asking prices compared to 1 year ago, the changes compared to 1 year ago. So for the week ending August 20th of this year, we've seen a 66.8% increase in the number of active listings with price reductions. This is a staggering number, obviously far higher compared to 1 year ago, right? 66.8% increase compared to 1 year ago. But that's not the trend I want to share with you guys today, because this is a different trend I want to share. So going back to June 18th of this year, we had 112% more active listings with price reductions compared to the same time period in 2021. Absolutely insane. Basically double the share, or not double the share, double the number of active listings with price drops compared to 1 year ago. But look at this trend though, because for the past 9 weeks in a row, we've seen a reduced share of price reductions compared to 1 year ago. So every single week since June 18th of this year, that percentage has been decreasing. To me, this is very interesting to see, because if we were to see a housing market crash, or the early parts of a housing market crash, we would see a giant amount of new listings. We would see a giant amount of active inventory supply, or an increase of housing supply every single week. We would also see a increasing share of price reductions each week as well. But we're not seeing that right now, right? So in my personal opinion, while we're seeing a decrease of the number of houses with price reductions compared to 1 year ago, at least a deceleration of that, is because we're not seeing as much new listings in the market, and also housing supply has basically stagnated over the past couple of months now. In other words, because we're seeing the stagnation of housing supply, home sellers have less competition for their houses. Therefore, they may not have to reduce their asking prices as much as they once did a couple of months ago. I also have a couple more theories regarding why we're seeing a decrease of the number of houses with price reductions compared to 1 year ago. Number one is right here. More houses with price reductions are getting into contract with home buyers, and therefore that would reduce the pool of reduced price active listings. That could happen, and or we could be seeing more home sellers that are more aware of this housing market slowdown, and therefore they're pricing their houses for sale accordingly. In other words, we may be seeing fewer overzealous home sellers who are more aware of our housing market slowdown and are pricing their houses accordingly. This is just based on my own personal opinion though, right? So leave me a comment below with your thoughts regarding this. So I have some more news to share regarding reduced price listings in some areas that we're seeing a huge amount of price reductions. But before that, I actually want to summarize what we just talked about because that was a lot of information for you guys. So number one here, inventory is still growing due to less demand, but inventory growth has been slowing, likely due to fewer new listings hitting the market. Number two, if inventory continues to stagnate, that could slow down this housing market slowdown, for lack of a better word, putting upward pressure on prices. And number three, price reductions are much higher compared to 1 year ago, but growth in that is slowing down. And lastly, number four, houses are taking longer to sell compared to the same week 1 year ago for 4 consecutive weeks now. In other words, the market is still slowing down. In regards to the share of houses that are listed for sale that have had price reductions right now, according to altosresearch.com, for the week ending August 19th of this year, about 39% of active listings right now have had price reductions. This is far higher compared to May 6th of this year, when we had 20% of active listings with price reductions. In other words, in the matter of 3.5 months, price reductions have basically doubled. And you can see this when looking at altosresearch.com's website here, because their most recent stats they have right now is a 39% share of active listings with price reductions. Again, this is for the 7-day average ending August 19th. But going back to the early parts of May, that was basically 20%. So that share has basically doubled ever since then. Also in areas like Boise, Idaho, for example, the share has basically skyrocketed and actually approaching very close to being a buyer's market, in fact, in Boise, Idaho right now. And in fact, the share of price drops in Boise has been absolutely skyrocketing. Have a look at this. Right now, 64% of active listings in Boise have had price reductions. And this is quite the turnaround because as of March 11th of this year, the share of price drops was only 15.92%. We're also seeing a high share of price drops in Denver, Colorado, because the share of price drops right now is at 53%. Also in Salt Lake City, Utah, the share is basically at 56%. In Tampa, Florida, the share is basically at 50%. Compared to basically 19%, or look at that, 16% compared to April 8th of this year. Also in Austin, Texas, the share of price drops is at 56% compared to, gosh, look at that, 12% as of March 11th of this year. So comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.